Ladies and gentlemen, good day and welcome to Q4 and FY24 earnings conference call of Rajoo Engineers Limited, hosted by Adfactors PR. This conference call may contain forward-looking statements which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Khushbu Chandrakant Doshi, Managing Director from Rajoo Engineers Limited. Thank you, and over to you, Ms. Doshi.
Thank you. Good evening, everyone. Welcome to the conference call for Rajoo Engineers Limited for the fourth quarter and full year concluded on 31st March 2024. It's a pleasure to have you all here. We appreciate your presence here today. Joining us on this call with me, Mr. Sunil Jain, our Executive Director, Mr. Prakash Daga, Chief Financial Officer, and our Investor Relations team, Adfactors PR. Let me start with the market scenario and some recent developments for that. India has the potential to emerge as a global plastic products producer. The extrusion machinery market size was estimated at $8.33 billion in 22 and is expected to reach $11.6 billion by 2030. The demand for plastic extrusion machines is soaring, as there is a growing need for extruded plastic products from several end-use segments such as packaging, consumer goods, construction, and automotive. This preliminary is the growth of the global plastic extrusion machines market. The domestic plastic product market is expected to grow threefold to reach 10 lakh crore rupees by 27-28. The export of plastic products are expected to grow from 40,000 crore to 1 lakh crore rupees, reflecting the global acceptance of Indian products. This is an excellent opportunity for the Indian industry, and we must make the most of it, as more plastic products imply more plastic processing machineries. Speaking of our company's performance, I am delighted to present exceptional financial achievements of Rajoo Engineers for the fourth quarter and year ended 2024. Throughout this period, the company has showcased remarkable growth and commitment, characterized by notable milestones such as elevated production levels, augmented machinery dispatches, and robust order book. I'm very happy to share that our revenue for the year crossed rupees 197 crore, which is a testament to the hard work and dedication of our team and focused efforts on the strategies charted out in FY23. This is just one step in the overall growth strategy. This positive momentum underscores the effectiveness of the company's strategic initiatives and highlights its ability to capitalize on the emerging opportunities in the market. Our order book has reached new heights, reflecting the trust and confidence of our customers in our solutions. We are committed to ensure that these orders are fulfilled promptly and with the highest standard of quality, further solidifying our reputation in the world market. During the year, we bagged a high-value order from one of the leading manufacturers of farm machinery and equipment based out of Europe. This prestigious order is for our cutting-edge blown frame line chip. This machine is used to manufacture tile bags as per the needs and requirements of customers. This innovative solution represents our ongoing commitment to provide the solution in agriculture industry with the state-of-the-art equipment that enhance efficiency and product quality. I am pleased to announce the successful delivery of two prestigious projects in the category of sheet extrusion systems, each boasting an impressive output around 800 kilograms per hour. These projects represent significant milestone for our company and underscore our commitment to delivering excellence in the field of manufacturing. Our supplies to Cosmo Films and Berry Global, two of the India industry giants, speaks volume about our reputation for reliability and innovation. This partnership not only demonstrates our capability to meet the demanding requirements of leading players in the market, but also signifies the trust they have placed in our expertise and technology. I am thrilled to share our latest milestone in innovation and technology, the enhancement in technology for our existing 5-layer blown film line range. This initiative represents a significant leap forward as we prepare to launch India's first-ever high-output 5-layer blown film line. With an impressive output of 800 kilograms per hour and a line speed exceeding 150 meters per minute, this cutting-edge technology sets a new standard in the industry, competing with global leaders offering value for money for our customers. Moreover, on April 16, 2024, we celebrated the inauguration of our new facility, marking a significant expansion in our operational capacity. With an additional 21,000 square feet dedicated to assembly, we are poised to streamline production processes and meet growing demand with efficiency and reduced lead times. Notably, our commitment to excellence extends to the establishment of a dedicated 7,000 square feet space for quality control, underscoring our unwavering focus on elevating quality standards across all facets of our operations. This investment underscores our dedication in delivering superior products and services, positioning us for the sustained growth and customer satisfaction in the ever-evolving market landscape. I am pleased to inform you that in line with our commitment to enhancing the shareholder value, the company bought back 26,176 equity shares at a price of 210 rupees, each in pursuance of shareholders' special resolution dated 17 January 2024. The decision to conduct a share buyback can stem from a variety of strategic considerations, such as efficient utilization of capital, giving value to early shareholders wanting to exit, and driven by a positive future outlook. By repurchasing shares, a company aims to enhance value for shareholders by potential increasing earnings per share and boosting returns. Additionally, such action signals confidence in the company's financial strength and future prospects, serving as a tangible expression of the management's belief in the company's ability to generate sustainable growth and shareholders' value. Our strategic vision is extensive and comprehensive. We are broadening our international presence, entering into the new markets, investing significantly in research and development to create a more energy-efficient product, and adopting a digital solution to provide better customer experience. The core of our approach remains our customers, and our goal is to continuously exceed their expectations. We have a robust plan to stay ahead of the competition by developing or acquiring technology which is adjacent to our existing portfolio to offer complete solutions in the sector, continuously optimizing manufacturing costs and standardization of the existing products that can give us an edge over the competitors, not only from India but globally as well. Looking forward, our focus is on securing a significant portion of the market in infrastructure, agriculture, electronics, and renewable energy sectors. However, our vision extends beyond mere market dominance. We are dedicated to fostering inclusion and diversity within our workforce, with commitment to allocate 8 to 10% of total employment opportunities for women and 2% for differently able human beings. Furthermore, under our sustainability program, we are determined to make significant strides towards reducing our carbon footprint. We aim to satisfy 65% of our total electricity needs through renewable energy sources, primarily through the expansion of our existing solar park. This reflects our unwavering commitment to environmentally responsible practices and emphasizes our commitment to driving positive change both within our industry and beyond. We are enthusiastic about the journey that lies ahead. Our objective is clear. We aim to create a long-term value for our all stakeholders. So with this brief note, I would like to hand over to Mr. Prakash Daga, our Chief Financial Officer, to take us through the financial performance of the company. Thank you.
Thank you, Ms. Doshi. Let me brief the quarterly financial performance. Revenue from operations for the quarter was rupees 52.68 crores in Q4 FY24 as against rupees 71.43 crores in Q4 FY23, a year-on-year decrease of 26.26%. This was mainly due to delay in the balance of payment and lifting of machines by the customers, since lead time of the order execution ranges from 4 to 9 months and it can exceed even 9 months in some orders. EBITDA, excluding other income, was at rupees 8.96 crores in Q4 FY24 as against rupees 6.47 crores in Q4 FY23, increase of 38.45% on year-on-year basis due to higher capacity utilization and improvement in operational efficiencies during the current quarter. EBITDA margin was at 17.02% as against 9.06%, YOY increase of 796 basis points. Profit after tax stood at rupees 7.08 crores in Q4 FY24 compared to rupees 5.39 crores in Q4 FY23, YOY increase of 31.35%. PAT margin was at 13.45% as against 7.55%, YOY increase of 590 basis points. Earnings per share stood at rupees 1.15 in Q4 FY24 compared to rupees 0.88 in Q4 FY23, YOY increase of 30.68%. Now coming to our full year financial performance. Revenue from operations for the year ended was rupees 197.35 crores in FY24 as against rupees 159.79 crores in FY23, a YOY increase of 23.51% on account of intensive efforts by a larger sales team and entry into new territories, coupled with revived demand for sheet extrusion lines and thermoformers. EBITDA, excluding other income, was at rupees 26.68 crores in FY24 as against rupees 14.02 crores in FY23, increase of 90.35% YOY on account of increase in sales, higher capacity utilization, and improved operational efficiencies. EBITDA margin was at 13.52% as against 8.77%, YOY increase of 475 basis points. A conscious standardization of products helped to optimize raw material and other operating costs during the year. Profit after tax was rupees 21.01 crores in FY24 compared to rupees 11.49 crores in FY23, YOY increase of 82.86%. PAT margin was 10.65% as against 7.19%, YOY increase of 346 basis points. Earnings per share stood at rupees 3.41 per share in FY24 compared to rupees 1.87 in FY23, YOY increase of 82.35%. With this, now I am happy to open the floor for any questions you may have. Thank you for your attention.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Manoj from Rajoo Enterprises. Please go ahead.
Hello. Hi, am I audible?
Yes, you are. Go ahead.
Yeah. Hi, sir. So congratulations on good numbers. So first question was a bookkeeping question. So has there been an acquisition of assets during the period, as I can see, the increase in the plant equipment? So just basically that in FY24.
Yes, there was a capex of 9.33 crores during the FY24, and it was mainly into land. We had purchased adjacent land for the expansion and constructed a building as well on that.
Okay, sir. And secondly, wanted to know basic trends that you have noticed in the plastic extrusion machinery, and for the next year as well, FY25 and FY26. If you could just guide something on that.
Ms. Doshi, would you like this question?
Yeah, sure. So yeah, as I mentioned, the kind of growth we are witnessing in the sectors like packaging, consumer goods, construction, and automotive, that is very encouraging, and that is leading the growth in the plastic extrusion machinery worldwide. Even the recent development in the electronic vehicle is also opening up a revenue stream, which may contribute in the future for the extrusion machinery.
Okay, ma'am. So it will be for the FY26 as well?
Yes.
Okay, and ma'am, any kind of numerical guidance, if you could, just an approximate.
If you talk about the global market, the current market size is USD 8.33 billion, which was reported in 22, and they're expected to grow and reach at USD 11.6 billion by 2030. And if we talk about the domestic market, product is expected to grow threefold to reach to rupees 10 lakhs crore by 27-28. So as far as domestic and global market are concerned, both the market is growing, and we feel that there is a huge opportunity for the products which we manufacture.
Okay. And sorry, ma'am, actually, if this might be a repeat question from last phone call. So what is the market size that we can address? If that would really help.
Yeah, this is the best part of the entire thing. The market is huge, and we are doing only a 200 CR. So there is a great opportunity, and we plan to expand our footprint in the various geographic locations outside India.
Certainly.
And if you talk about the domestic market, our market size is nearly, for the horizontal sheet extrusion and thermoforming machine, we hold 80% of market share. And in the global market, those market shares are peanuts, and there is a huge opportunity to reach out to all of them. If you talk about the vertical extrusion systems, which is blown film line and other products, we hold in the domestic market nearly 60% of the market share, which also again giving us an opportunity to grow. And in the domestic market, in the export market, again it's peanuts, which is again giving us an opportunity there.
Certainly understood, ma'am. Thank you so much. And just one last question mainly on the working capital cycle. So I can just notice an extension of the inventory days, from, I guess, 130 to 190 days or something like that, if I'm not wrong. And also there has been an increase in the payable days, just, I guess, about 10 to 15 days. So has there been an, difficulty from the, on the, just the creditor side for us? And also, what factors are, contributing to this change? This is an industry-wide phenomenon, or just, one-off for our company? And yeah, that's my question.
Yeah. Let me explain it. The inventory days have increased due to higher inventory level at the year end on account of time gap between the production and lifting of machine. Back-to-back procurement of high lead time of components against high volume orders. However, there is it's a temporary increase in the inventory, and we hope it will be back to normal within next 2 quarters. Second reason is second question was about payable days, which has increased.
Yes.
It is due to back-to-back procurement of high lead time components against high volume orders. Now see, due to this Red Sea crisis, the imported components what we are importing from Europe and other countries, the lead time has increased. To secure that, to overcome that lead time, we have to increase the inventory. But the company has ensured that the longer holding time of the inventory is accommodated with longer payment obligations with the import consignments with higher return financing. So overall, the net working capital cycle has temporarily increased to 165 days.
Yes, sir.
However, the entire inventory, in our case, we are following order-based production. So the entire inventory, what we are holding, we can say it is sold inventory.
All right. So, like you said, in next couple of quarters, so first half, we can see some normalization in the working capital cycle, correct?
Yeah, we hope it will be normalized because let us see now how this rate fix crisis and all takes place. And secondly, the dependency on the customers with lifting of the orders. So these are the two factors. We hope it will normalize during next two quarters, and we can be back to normal levels.
All right, sir. Yeah, that's it from my side, sir. I will get back in the queue if I have any other further questions. Thank you so much, sir.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of R.K. Ladda from Yash Investments. Please go ahead.
Congratulations for the good set of numbers, and thank you for giving me the opportunity. I just want to get some clarity on is there any replacement demand for our product? Hello.
Hello.
Am I audible?
Yes, sir, you're audible.
Yes.
Is there any replacement demand for our machinery? As I have read in your presentation that there now at present more than 2 lakh core machines are presently in operation. Then what is the average age for our machines?
So generally the average age used to be 20 years, reduced to 10 years. Not because the technology upgradation nowadays is so fast that it reaches to 10 years, and after processors may feel like upgrading the technology or enhancing it.
Okay. Then is there a good replacement demand also?
Yes. There is a good replacement demand as well, and there is good demand for the refurbishment as well, which is again a different revenue stream opening up for us.
Okay. Thank you. This is from my side. Okay, and all the best for future working of your company.
Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Rahul Khanna from ABS Global Investments. Please go ahead.
Yeah, hi, ma'am. Congratulations on the good set of numbers. I just had a question that looking at the growth, what kind of revenue and margins are we expecting for the coming fiscal year? And also if you can guide for the next 2 years.
Yeah, considering this year and the kind of order booking we have, we are targeting to grow by another 17 to 20% in terms of revenue by next year, with improved EBITDA margin at around 13 to 15%.
Okay. Right. And ma'am, these margins, are we looking at these as the sustainable margins?
Yes.
Right. Thank you so much.
Yeah. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Raj from Rajoo Partners. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Yeah. How much is the order book currently?
Mr. Jain, would you like to take this?
Currently, the order book is about 140 crores, and we expect in the next 6 to 9 months, these orders will be executed.
Okay. And how much is the current pipeline are we seeing?
Pipeline is, to put a figure to it is very difficult because we are looking at a global level. But I would say we are very bullish because the market and the demand are increasing. As was mentioned earlier, we are getting into new geographies. So we have a good pipeline, I would say, of at least about 800-900 crores. But it all depends upon the conversion rate from pipeline to order booking.
Yeah. So how much is the average conversion rate, pipeline to order book? Just a rough figure.
Roughly, if we are looking at a current pipeline of 1,000 crores, we are looking at that getting at least 1:5 would be the conversion, depending from territory to territory.
Understood. All right. Also, how much is the capex are we planning to incur for FY25 and FY26?
I think Khushbu can take that question.
Ma'am, may I request to unmute your line, please? Khushbu, ma'am, can you hear us?
Hello.
Hello.
Yes, ma'am. Now you're audible.
Yeah. For the next year, we are looking at around 15 CR of capex in the tools, mainly on the CNC machines, imported ones. So that would be there, and for next year, more capex would be on the space creation.
All right. And who are our main peers in our segment?
Sorry?
I'm asking, who are our main peers in our segment?
Yeah, there are two. If we talk about the European competitors, there are three major players, two from Germany and one from Italy. And if you talk about the domestic market, there are also two big players in the domestic market, Windsor Machines and Cabra Extrusion.
And we compete with them on the basis of price, on the basis of quality?
No, we compete with them on the basis of technology.
All right, okay.
Purely based on the technology, because these two competitors are double in the age of Rajoo Engineers. So we compete in terms of technology.
So our products are comparatively higher price to an extent.
I would say the higher technology that leads to a little price increase.
All right.
And if I may add to that, when we talk about higher technology, in terms of energy efficiency, we really give a value for money, and that very well justifies being the revenue expenditure. It very well justifies the premium which they would be giving to us.
Understood. All right. Okay. Thank you. Bye.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Supan Parekh, individual investor. Please go ahead.
Hi. Good afternoon, sir. Am I audible? Hello.
Yes, you are.
Yeah. Congratulations on good set of numbers. So I have just a couple of questions. So, my first question would be, are we facing any challenges, in case of manpower or logistics over the period of time?
Yeah. Which business doesn't face this? Of course,
right.
We are facing, and of course, Rajkot, Rajkot, where we are based, is also coming up with a great engineering hub. That also creates a scarcity of manpower. And but yeah, we are able to. I mean, if we talk about the current manpower situation at Rajoo Engineers, more than 60% are the employees with us since last more than 10, 20, 25 years. So we are always blessed with the people around, and we are not really struggling with the manpower, but of course it's a normal routine business challenges which we face when we are quite well able to handle that the same. And as far as the supply chain is concerned, Mr. Daga talked about the Red Sea crisis and all. So those are the things which is causing an hurdle in the export market for us. For the domestic market, more or less things are pretty much under control.
Okay. So I just wanted to ask about the Red Sea. Which are the major countries we export to?
Yeah, we export. Mr. Jain, would you like to take this, please?
Sure. We go as far as in Colombia, in Peru, and then coming back in this part of the world. Then there is Africa, there's Nigeria, Kenya, South Africa. Then getting into, we already have a strong presence in Vietnam, Malaysia, Thailand. See, when we talk about the Red Sea crisis, it is not only exports, it is also availability of vessels and the logistics issue, because we do use some equipment which is imported, so that affects the lead times. So when we are talking about these geopolitical